Thank you very much for tuning again to another Dental Dummies podcast. We are live. Well, not live, actually. We're here with Joe Dimarco, our co-host here, and a special guest, Nick Esquire from Live Oak Bank.
Hey,
Don't forget
everybody.
to click the like button, help the algorithm out, comment below, share it with your friends, and don't forget to follow for all the upcoming announcements on Instagram at Dental Dummies Podcast.
Even if you don't
Cool.
like this, just get anybody to sign up, subscribe, fake accounts, real accounts. We don't judge. We're not like Twitter or Netflix. We want as many of your friends and family that aren't users to use it. So it's fine. Right, Min?
Absolutely.
Oh, I thought you were like leaving. Like I thought that was like a
No,
disapproval.
my dog wanted to come back in.
Bring the dog in.
Yeah,
He's
bring
in. He'll
people in.
he'll 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 jump in the show.
I
He'll
love it.
jump in.
I love
So-
All
it.
right.
Yeah, today we're going to learn a lot about SBA lending and high risk lending. And Nick Esquire, I call him the squire of lending, because why have a king when you can have the squire? So basically, and first of all, kings play hard to get. They're very demanding. Nick is easy. He's just excited to get attention. He wants to give you a loan, and he does the type of projects Nick does, and he'll go more into it, but to give you like a little like 5 second on what Live Oak does and what Nick's role is, they're for like the clients that want to do the real projects. You want to build a ground up startup, Nick's your only option. You're going to go and buy a building and a practice. Most of the time, Nick's the only one who's going to do it. Nick's lending is the core lending that helps our big players get what they need. They take out the bigger loans. They do the bigger debt. I mean, everything's big in Wilmington, North Carolina. It's insane. I saw their campus. It's big. You would think that they were in Texas. It's a magnificent bank, and they help a lot of our clients. Probably about 6% of our clients will be in a situation where they need it. Doesn't sound like a lot, but when you're dealing with hundreds of startups and acquisitions, it can end up being a lot of people. And even though it's not a crazy amount, it's all the people that really want a gun and own what they do. But yeah, Nick, if you want to give a little bit about yourself and kind of why you're here.
Absolutely. First of all, guys, thank you for having me. I'm stoked. This is awesome. I mean, such a cool thing what you guys have done at CFS over the last like year and a half or so since you really broke off. Man, and it's really exciting to see, and I'm super stoked to be involved. And I mean, you and I kind of got involved together, like kind of on a secondary piece of it. Like we were like, wait a minute, you're on this project? And I was like, yeah. He's like, you're on this project, and it ended up, building out a relationship that, is more of a friendship than a partnership. But I mean, we're here to work together, work with each other, and I mean, man, I'm just stoked to be on here. That being said, my name's Nick. I'm from here, Wilmington, North Carolina. I work at Live Oak Bank. Live Oak Bank is actually located here in North Carolina, Wilmington. That's where our headquarters is at. We're the #1 SBA lender in the nation, so we focus on lending within the Small Business Administration, a government-backed program that we provide financing towards. That being said, I'm on the healthcare team. There's about 9 of us here on the
I was
team.
thirsty. What? I was just drinking water. I didn't do anything. You guys get distracted. I'm here to learn about SBA lending.
And I'm here to dish it. I'm here to dish it. So that being said, an SBA. So when you think SBA, the acronym itself stands for Small Business Administration. When you're looking at let's say a mortgage for your home, there's FHA loans, whereas you're looking for a quote unquote mortgage or a commercial loan for your business. When it comes to real estate or in any sort of transactions, startups, expansions, and whatnot, the SBA program has those advantages there for us to provide financing for that project itself. That being said, I mean, I think I mentioned, we're based in North Carolina, 9 members on our team. We service nationally. And our team itself is focused specifically within dental. But the bank itself, we've got, 30 to 40 different verticals that we provide, financing towards. But, part of the advantage of working with us, and part of the reason why I get to work with you guys so directly, is that 90 to 95% of my business is driven within dental. So I'm talking to dental borrowers on a day-to-day basis and, helping them, like you mentioned, on big, larger scope projects and, or, the smaller ones that, conventionally couldn't be qualified. But that being said, I mean, we're here to serve. Yeah.
How many do you do in a year? How many do you do in like a 12-month span?
Our team in general, or?
I mean, just you, not your team. I know your team does a ton of them.
Yeah. I mean,
how many loans do you normally like just dealing with, not necessarily closing, because these projects take a while. Like,
yeah.
How many conversations do you have with the dentist a year?
Oh, I would say, I mean, conversations with dentists, I mean, in general, like from the standpoint of, just, starting them off when it comes from a, hey, let's get you qualified standpoint. I mean, my territory is so large, so like South Carolina all the way to Maine, like I'm having those conversations 2 to 3 times a day, in a sense of just, seeing where they're qualified, determining where they're at, determining what product's going to suit best for them. But I would say like from an approval standpoint, I mean, like 99% of the deals that I'll propose will have an approval. Like, I don't think I've gotten declined on anything that I've submitted for an approval standpoint. But that just means that we're taking in, quality opportunities and, getting them done and serviced and approved and then financed, and ultimately building out a longer term relationship there. Whereas, we help them kind of grow the business from an asset standpoint. So.
And we had Nick helped 3 of my clients literally last week.
Yeah.
Perspective on how often we use them.
Yeah.
And sometimes we use them just to find out we can do something. And we'll be like, all right, we'll do that in 12 months.
Yeah.
I feel bad, but that's kind of what he's here for. And you can't be scared. Just because you hear SBA, people get scared and they run away. Yes, the interest rate, lack of better words, is shitty. It's not about getting the best. It's about getting a project that can make you a lot of money done. And Nick will tell you that. He'll tell you how to make it all. He'll help design it all. But my main reason that I have clients use the SBA and use programs that Nick has is to get the big projects done. The big stuff. Like, there are things where you got to think about, I'm buying a business. What can I have now that's going to bring me a lot more benefit in the long run? Like Minh looked into it. It didn't make sense for him to build it. What were you like? It was like $3 million or something like crazy, right, Minh?
It was a $3 million piece of real estate, and that was just the real estate. So no build out, nothing. It was just the building and the lot.
So that's too scary. Like, Minh,
for a startup,
get perspective. You're literally living in your parents' basement. You can't get a $3 million piece of land. And that's what Nick said. Nick was like, "Wait, who is this guy?" And I'm like, "Listen, I was just showing him. It's okay. He's not gonna buy it." But normally you try to buy, like, you're going to try to buy something in New York. Like, Nick's your guy. It's expensive. You can't get conventional lending for that stuff. You try to buy a practice in the property. You normally need them. Or I had a client that's trying to buy the practice and the building because they're required by their contract. Nick helped me get it done.
Yep. And
it wasn't easy. Took him like a week of hard work, sweat, and tears. I could tell he was nervous every time I called him because he was like, it's not done yet.
Dude, I just
back. He did the classic, like, I don't want to let you down, but like there's like a 5% chance I'm gonna ruin your day. And I was just waiting for it, and he gets it done. And these are the situations that my aggressive owners are gonna be in. I had like 10 people who are working with us with Ideal Practices that said they want to do a ground up. Well,
wow.
You get your conventional lender, like your Danny who came on, or like a Bank of America or a Huntington, and then you got to get a Nick. You can't do the project, and people are worried about it hurting. Does it hurt your credit to talk to you, Nick?
Yeah, no, not at all, not at all. And to speak to some of your points there, like we talk about, being, the scariness of the SBA. When it comes to the rate, it's not the best rate, but I mean, we're here to basically sometimes be a short-term solution for a longer-term gain, like to do the ground up startups, to buy real estate for people that may not qualify conventionally, but to make it happen today, whereas there's some institutions that are unable to, come in there and be able to take on, that risk and whatnot. But that being said, I mean, from a slower standpoint, that's a fact that, I love to debunk, because, Live Oak Bank, we have something where it's like a PLP. So we're a preferred lender with the SBA where we can approve, fund, and service everything in-house without having to go, getting that approval in place at first and then going to the SBA and getting that approval in place. So historically, I mean, I can definitely see some issues where people, have the experience via SBA, with a smaller, bank, a local bank or whatnot, or someone that doesn't specialize in it and whatnot. But that's all we do, like day in and day out. And so our relationship, one, with SBA, but the process and the speed and whatnot is something that really stands us out, which makes us the number one SBA lender in the nation. I mean, we're growing like crazy right now, and it's really cool to see. Like we talk about opportunities like ground up startups. I think I'm on like my 6th or 7th one this year, where we do work with Ideal Practices. We'll work with your conventional lenders, whereas I'll be there to buy the land and build the shell, and then you take that conventional leasehold product that those guys have, and then once I'm done with the shell, they come in and build it out. But that's a typical process of what those larger scope items are, if the borrower is qualified. And I mean, another thing you brought up was having conversations. That's like the biggest component of it all. I mean, to be fully transparent, I'm a non-commissioned lender, so like my conversations with borrowers are fully in trying to figure out what they want to do, one, and then how we can do it. Whether that's me being involved or me being like, hey Joe, like what they're looking to do is something that you should put in, X, Y, and Z person for, and, that's going to be the best route for them to take. I mean, from a longer term relationship standpoint as a banker, between, our partnership together working with CFS and the borrower, like they're going to remember that and be like, yeah, I mean, I talked to Nick, but he led me in a direction that was best fit for my scenario, best fit for what I want to do today.
He's the only banker that will refer away business.
Oh yeah,
and that's why I like him. And it sounds terrible, I guess, like if your company's listening to this, but that's not true. He knows when the product fits and when it doesn't, because he knows he has a unique product that can get you somewhere. It's not a one size fit all. It is.
Yeah.
You are in this particular situation, and we need to propel you into ownership, or we need to buy out this building or this practice, and we're under different circumstances than normal. That's where Nick goes in a rapid expansion. My guys who have multiple practices, they use Nick for expansion because he has a lot more flexibility with his products than anybody else. The payments can normally be stretched out a little longer. They can normally give more funding. It's not all about, and I'm going to say this with every bank that we talk about, it's not all about the interest rate. And it's not all about how long you pay it off. It's all about the type of product you can get. Because there's a lot of good debt you can take out that normally you'd have to wait 5 years to get. Mm-hmm. And I have people coming out of residency being able to get loans that they normally wouldn't be able to get. So it propels you that next step forward without you having to wait 5 years like all your peers tell you.
Absolutely. So to review, if we can, for the audience here, with SBA lending, just based on what you've said so far, because of everyone here, I'm the least knowledgeable with this aspect. But so SBA lending, you compared it to an FHA loan, like a mortgage. So it's a government-backed program that allows essentially small businesses to have the opportunity to expand without forking up like 20% of their own cash down to expand their individual location or have a second location. Am I understand? And it's like,
yeah, exactly. And so like I like to use the FHA comparativeness there in a sense of that it's a government program, whereas in a government subsidiary and basically we are the specific lender within that space. And when it comes to, different types of opportunities, like you mentioned there, expanding and startups and whatnot, like let's use startups, for example. Startups, they require 10% injection on our end of things. Whereas, there are the conventional lenders where they can do a startup when, at 100% financing for leasehold build outs and whatnot. But I mean, our product there from a startup perspective, is a 10% injection there, but allows for, if they have that liquidity and have that, qualification aspect of things, it's something that we'll approach. But also, we talk to borrowers that, hey, Joe, they want to do a startup ground up. And some of the first questions I ask, which is a serious one, is what's your liquidity look like? And if it's something that's like, not within the realm of things, we'll talk them through of, okay, like we need liquidity up to X, Y, and Z, or your liquidity at X will only allow you for financing at Z and whatnot. And so like that being said, like Where we really fit best too is not only, we have the opportunity to, do ground up startups and, work with your clients on that aspect of things, but on the expansion aspect. So like your clients, you work with a lot of startups, Joe, but like those guys are going to be super established here in a year or two. Whereas when they want to move from a leasehold space to buy real estate, land, do a ground up and whatnot, like I can be their guy to provide them 100% financing and I'm putting it on a 25-year term and essentially be able to preserve their cash, but increase their cash flow for that matter. And so that's what we like to promote and what we like to kind of, push in the sense that, yeah, we can have the rate talk all day and whatnot. But like, from my perspective, like being a non-commissioned lender, like we can talk about rate. Yeah, sure. But like, my business is going to be driven off rate. It's going to be driven off opportunity, partnerships, relationships, and making sure I can lead in a direction that's going to, one, put the bar in the best situation possible, but help our partnership too, in leading them in the best way possible.
So if another one of me thinks that like, oh, a chance to own some real estate and we have we don't have a current existing practice.
Yeah.
Is there any rules of thumb? Let's say we do want a ground up because we're in the middle of like where real estate is just rental opportunities are very, very low. The only option is to own the real estate. Is there any rules of thumb that, let's say, a young provider should be aiming for a liquidity position wise, like for how much they want to borrow?
Yeah, that's a great question. And honestly, it really depends on different markets too, because in different markets, obviously in New York City and whatnot, you have real estate that's super expensive. But down here in North Carolina, we've got, a quarter of the price of what it costs up there in New York. Whereas, when it comes to working with specific borrowers and niches and industries and or not industries, but different markets, what I like to look at is like, if you're a startup and you're looking to buy real estate, and whether it's a ground up or essentially, buying something,
let's say a unit, like buy a condo unit,
a condo, whatnot. We like to have a rule of thumb of living over, post injection, having at least around like 50 grand of liquidity left over. That's a good way of, sustaining their current capital that they currently have without, over leveraging them, being like, okay, you have 150 grand. Let's use up 150 grand. No, let's not use up 150 grand. We want you to have capital in your back pocket. But that being said, I mean, to answer your question of like, what they should strive for, my historically, I would think ground up startups and condominiums, they average a loan amount around like 1.1 to 1.2 or less. So I would say like at that point in time or less, when you look at that and kind of back into things like, okay, 1.1, 1.2, like let's say if it's a $1.2 million building or it's a $1.2 million like project there that I'm, proposing for a ground up. We're talking about 10%. So if we go and back into, hey, this building costs 1.2 million, you back into that 10%, you're thinking, okay, $120,000 is what I need to buy the real estate portion of this space. Whereas, we want to see maybe around 50 liquidity on average left over. So right there, total, you've got about 170 that will really allow you to get creative. And I'm speaking on like the max point of things. Whereas, we usually work on getting things lower, obviously on, the lower price point of a real estate, the lower the injection amount, which ultimately, we can get creative with on, where your borrower stands today.
So, when you say injection amount, that's just another word for down payment. That means like, so if they put in 150K and it was 1.2 million, you would finance the remaining, was it one point, whatever that is.
So let's go back to the purchase price of 1.2 million. So, and they've got 150K in cash. They only need to put down 120K there to purchase that $1.2 million building. And so we like to see, to working with our conventional partners or whatnot, Live Oak Bank will buy real estate. They'll come in, do the leasehold build out or whatnot. Whereas, we're full funding purchasing that building. And that 10% aspect of things is more like when you're starting to look in the market, wherever you're at, there are deals where I'll do a $500,000 condo purchase and that's 50K down. They can have 200 grand there. Sure. That's great. But we're not going to ask them to put 200 grand down on a $500,000 building when we really only require 50K. or 50 grand down on that aspect of things. That 10% and also preserving that cash there when they're also going to get maybe 100% financing with a conventional lender to help build out and provide working capital and whatnot.
Also, if we had a scenario, excuse me, where somebody buys a practice and they want to buy the real estate in like a year, you normally that's normally like your bread and butter, right? Like you guys can normally finance that just from the practice cash flows, right? Pretty much.
Exactly. So like, let's say they already own their own practice. Let's use Minh, for example, here. Dr. Min's been practicing for 1 year. He's got 12 months of ownership. Per the SBA 7A program, we can provide 100% financing in order to finance your expansion to go buy a building, go do a ground up, all lumped into one loan product that will ultimately be determined based off cash flow. So like Dr. Minh and I have a conversation. I collect his financials, and after a year and a half or so, we have a full picture of, okay, what does this practice look like cash flow wise? And then we go through a cash flow analysis where we determine what amount that can be borrowed, but not over leverage. So we determine it based off, okay, can he still, pay himself, live his lifestyle, but also take on this opportunity? I mean, we can, come up with a amount of X. Okay, let's say you qualify for $1 million for that example. And within that $1 million, we'll allocate the building purchase, the equipment, the working capital, the whole 9 yards in order to, allow you to expand 100% financing via the cash flow works and to preserve your capital.
I feel like I'm getting my own one-on-one consult on YouTube right now.
Good.
It's
you won't be able to get a building where you are because they're all freaking expensive, but you can still dream, man.
Oh, I dream all the time. Don't you worry. I ask about random stuff that I know I won't be buying in the next 6 months all the time.
That's the thing, though. You can ask about that. We can have those conversations. And then, that's a boomerang effect that's going to come back to me down the road when you are ready, because we've been having those conversations and whatnot. And I know you mentioned this on the podcast with Danny, like having a conversation with a lender first is huge, because then a borrower can understand where they're at with things, whether they have an existing practice in order to cash flow X, or, what does their liquidity look like in order to buy a building and do a startup. So. Yeah.
In 10 years when Min has money and if you're not dead, Nick, you'll be the first guy he calls.
I love it. We can make that like the start of this podcast. Yeah.
Well, it's nice when you talk to you guys first, just because we have a aiming point. So if I know one day I do want to own some sort of real estate and I know the price of the area, I am aware ahead of time before I'm open. Okay, what dollar figure am I aiming for the liquidity part and the injection part to qualify for the loan, for me to have another wealth building asset, maybe put in a tenant, and pay myself a higher rent than usual, and tax planning and such. I think that's what's the important part, where part of the seminars that I give, where it's like, okay, where do we fit in, especially if it's a newer practice, 1-2 years old. We're not going to have the same kind of cash for someone that is like 10 years old, where a lot of orthodontists in my space, I see lots of them, they've already been practicing for 10 years, and they rented out their unit from their startup, and they built this monstrosity of a building, and it's beautiful stuff. But then it's like, okay, but what if someone like myself tends to be a little bit more aggressive and wants to do that ahead of time, or people want to expand really, really fast? I've seen one ideal practice client. It's probably been open for like 5 years. He has 3 locations, orthodontic practice. That's impressive. Awesome. But I think that's where you guys come in.
Exactly. And we'll be there to, like you mentioned, like when you have that, that establishment, once your practice is cash flowing there, like that conversation of understanding what you can qualify for in order to expand is one that, we'll have a conversation about at that point in time. But to, set realistic expectations, but also my conversations with borrowers are really about like not overshooting and under delivering. Like I want to set like, hey, this is where you land here. This is how we can, help you at X. And a lot of these conversations, that come to me for SBA, loans and whatnot, or either conventional declines or larger projects. Whereas, I can personally, you talked about earlier, Joe, being flexible. That's one thing that, Live Oak Bank can really pride ourselves on, is that, flexibility and creativity is massive on us. And we talk about that deal, the other week where I was like, hey, like, I'll let you know, let me like finish my analysis and whatnot. Whereas, hey, it took us a minute to really get there. But like with my experience coming from, underwriting and as an analyst here at the bank, all within dental, allows for me to figure out, okay, where can we make this happen, for one, the borrower, but also the relationship here. And so, I mean, that being said, like all encompassing, like, I mean, the flexibility and the creativity, like, I mean, then the speed in general, I mean, we can be able to step in for all of that. And at that point in time, we'll be able to lead in direction too, and really provide a good experience overall for the borrower and yourself too, because it's a reputational aspect of things as well. So,
no, you really are the Elastigirl of lending. And Min, I pulled like, I'm shaving my beard tomorrow, dude. I pulled like
Why? We have to get a new caricature.
I pulled, no, not all of it. Like I gotta trim it down. I pulled like 5. Did you see the hairs I pulled out of my hair? The hairs from here are getting caught in here, and I have to pull hair out of my hair.
Is it becoming like those Velcro sneakers? It's like shh.
Yeah, it's almost like my dad will do that. He'll be like this, and I'll be like, oh, that's an ear hair, and he'll pull a hair like this long, and it'll be a hair from his ear, like his ear, the inside of his ear. Man, I'm getting to that part, like where like some of my back hairs are starting to creep up. Like I got this, like all the way back here, and they're starting to creep into into here. Like it's starting to get a little much. I gotta trim it down. It's like a head.
Maybe you have that fungus that's in The Last of Us on HBO. It just grows on you.
I eat too many vegetables, and everything's starting to grow too much, and it's.
Joe, I think you look great. I think you should keep growing. Let the beard grow, let the hair grow, do your thing. I think you should, make it. I think you should have the hair go down maybe to your waist.
I should do dreadlocks.
I'd
be the best if I'd be the only financial guy in dreadlocks in New Jersey.
Who's Italian?
Yeah,
I think I'd be like, yeah. No, man, they don't give us tons of money. But forget Coca-Cola for a minute and think about your dental practice. And when you think about Coca-Cola, when you think about your dental practice, you think of the Squire Dentistry, you think of Nick, and you call him and you say, Nick, I want a loan with a high interest rate and
100% financing and nothing down.
Yeah, you ever see those commercials? I want it now, and then like they give them the loan, and it's like it's good to talk with Nick and his team on this stuff, especially when you're doing big projects. We a lot of you who watch this stuff have probably already talked to them who are doing startups in these ground ups or these crazy building buys. And that's actually why we brought him on here, because I feel like I was calling him every other day for 2 weeks. I was like, let's just explain to people what you do. Because I feel like sometimes people take 2 weeks to respond because they're scared. They're like, oh, the SBA's emailing me. I'm like, no, that's Nick Esquire. He's your lender. He's not the SBA. It's not scary.
Yeah.
Last thing I wanted to add, I had someone ask me the other day, do they have to write a business plan to get a loan?
Not to get a loan, but depending on if they want to do a startup, yeah, absolutely. I mean, from that aspect of doing a startup, whether, there is real estate involved or whatnot, a business plan is just good in general to understand what you're going to do. Like, it forces the borrower or, that person that wants to do a startup to really understand their market demographics, how they want to basically bring in business and, the process and whatnot, understanding, whether they want to be a fee for service practice or whatnot, and kind of understanding the whole aspect of what they want to do. And that helps us, determine the financing aspect of things too. So, I mean, from a standpoint of, yeah, if they want to do a startup, absolutely. We'll require a business plan because we understand what they want to do. So.
No, and I wanted to ask because this person didn't have a consultant, and normally I'll be honest, guys. We normally recommend having a consultant. We work with like 6 of them. If you reach out to us, we'll find you one for your situation. Just keep in mind you should have a consultant do these things, but if you don't, we try to help, and like the banks are going to help you. They're your ally. Nick wants you to get your loan. Believe it or not, he actually wants your project to do well, because if you have a big, fancy, nice practice, he gets to brag that he set it up. So. It's all, just keep that into perspective when you're dealing with these people, and make sure you ask questions. And it's good to know. I didn't even know if I assumed all the consultants did, but I told them, I said, I have no clue.
And I mean, coming from like, oh, sorry, man, go on.
No, go ahead.
No, I was saying like coming from a standpoint of you know, yeah, we have a higher interest rate than most in market, but a lot of the reasons behind that it comes from a banking standpoint that's out of my control, like cost of funds and whatnot. But it's not something that's going to be outrageous. In a sense of like you mentioned before, helping your clients out and being able to get them in a project in a brand new ground up construction building. Like I'm going to be there for it, and a lot of the reasons why I've kind of been able to, I guess, be successful in the role in the last year or two is one, I came from the bank in a sense of last 6 years as an analyst and then as an underwriter, and now last 2 years as a lender, going to my third year. But the most important piece is my dad was actually a dentist, and so and he never owned his own practice. He never had his own leasehold location or any sort of staple. He was in the Navy for over 30 years and then worked for a local county as helping mobile dentistry come to fruition here in the local New Hampshire County area. And so that being said, from a personal standpoint, I'm helping borrowers see things bigger picture, but helping borrowers live a dream that sometimes I look back on. It's something that my dad was unable to fulfill and whatnot. So from a personal standpoint, there's more motivation for me on my side of things. One, to lead a borrower in the right direction, but ultimately get the project done for them and whatever they want to do. So
cool.
Yeah.
So if someone is interested and this project comes up, where is the best place to reach you?
Yeah, you can reach me directly on my cell number. That's the great part about us. That separates us out from your largest institutions is that you're not going to be calling a 1-800 number. You're not going to be calling anybody random. Joe will be obviously, Joe will hand out my direct cell phone number. I don't have a work phone or anything where, I'm happy to have a conversation on just about whatever you want to do. But ultimately, at the end of the day, if I'm not able to get it done, I'm going to lead you in a direction that's going to be the best fit for the borrower itself. Yeah, I'd love to have the business and I'd love to be able to get the project done. But at the end of the day, there's no benefit to me or to the borrowers in general if I'm trying to work something that, that they can get better financing for. And that being said, that's where we fit as an industry and, how we can help your borrowers and your guys and best fit. And we've done some really good business with a lot of, your clients and ideal practices and all the consultants that you guys work with. And I'm just super stoked to work with them more. But in short, man, they can call myself or email me.
Yeah,
you want me to put
your contact info?
Yeah, for sure, man.
Right here.
Yeah, absolutely.
Right in that corner.
Love it.
Well, I can't reach all the way to that side of the screen. I'll put it below Nick, somewhere over here.
Put it, yeah. Put it in between his fingers. So that looks like he's holding.
Okay, in between the fingers.
Oh yeah.
I'll do that. Cool.
Well, thank you everybody for your time. We're working on the podcast thing. It's not very good, but we're getting sponsorships. We're working our way up to the top, and thank you to the newly anointed VP of Live Oak. What are you like? What's your official title, Nick? Tell him your title.
Oh God, it's the Vice President of Healthcare Lending here at Live Oak Bank. There's multiple of us, but hey, it's a nice fancy little title there. But at the end of the day, still doing the same thing that I've been doing the last 2 years. It's just title. Yeah, it's just I might be able to, now I just need to do more. So
cool.
No, but it's really good you took the time out. Everybody's very appreciative, and we'll make sure that everybody has your info, and I'm sure we'll have you on here again soon.
I love it. Thank you guys. I appreciate it. CFS or die, and we'll catch you soon. Appreciate it, man.
Cool. Don't forget to hit the like button. Helps the algorithm. Follow us on Instagram, Dental Dummies Podcast, YouTube at Dental Dummies. Comment, is there a piece of real estate perhaps in your area that you're looking at? Feel free to write that in the comment if there's anyone that feels compelled to comment with our 20 subscribers. But we're growing. It's okay. Yeah, we're getting there.
Let's go.
Yeah, my mom will subscribe tomorrow, so we'll be good.
Awesome. Bye, guys.
Later.